So now 18 past and the president back on True Social a moment ago, and he's cranking up the pressure on the Fed yet again. So here we go. He writes, too late, Jerome Powell is costing our country hundreds of billions of dollars. He is truly one of the dumbest and most destructive people in government, and the Fed board is complicit. Europe has had 10 cuts. We've had none. We should be 2.5 points lower and save billions of dollars on all of Biden's short-term debt. We have low inflation. Too late's his nickname for Jerome, but too late's an American disgrace, end quote there. Yesterday, he was calling for he said we should be 2 points lower. Today, it's 2.5. That after a jobs number that came out that was fairly stable. And the Fed's thinking about, in the interview yesterday with Jerome Powell and his comments, they're thinking about tariffs and the uncertainty with the war. So they're considering all that right now, and they are staying put.
So once again, the Trump economy is continuing to defy so-called expert expectations. And yet, despite that fact, very frustratingly, we seem to be stuck in this constant loop where the so-called experts, the economist forecasts over at the Federal Reserve continue to say, oh, we're going to have inflation. Oh, we're going to have a bad economy. Those things keep not happening. And yet the Fed continues to double down saying, look, we're going to do this. We're going to keep interest rates high, for instance, because the economy is going to be bad. And that's what our forecast says. Never mind the fact our forecast keeps on being wrong time and time again, and we refuse to adjust. It really is this ridiculous cycle where, frankly, as Donald Trump and many other are accusing, and I think is pretty obviously the truth at this point, you have a situation where Jerome Powell and the Federal Reserve are either incredibly stupid when it comes to the interest rates, or probably more likely they are intentionally trying to sabotage the Trump economy, because yet again, we have the Federal Reserve still making more doom and gloom expectations for the U.S. economy, despite the fact that every single time those expectations, those forecasts are coming not true. And we'll tell you all about that in today's video, because as you can see here, this is the recent statement by Donald Trump this week after the Federal Reserve, once again, guys, despite the so-called tariff inflation being virtually non-existent, despite consumer confidence in May actually going up to its highest levels since 2021. Same, by the way, is true of recent approval ratings on the economy. We actually showed a poll in a recent video showing 52% of Americans now believe the economy is in a strong or positive position. That is the first time, guys, that same poll has been positive in the direction of the economy since June of 2021. Repeated trends you keep seeing here that things are going on the up. The Federal Reserve continues to be in denial. And of course, this week, Jerome Powell made the decision to keep interest rates high. He's refusing to listen to Trump and make a cut. And here was Trump's response, as you can see here. So too late, yes, Jerome Powell is costing our country hundreds of billions of dollars. He is truly one of the dumbest, most destructive people in the government, and the federal board is complicit. Europe has had 10 cuts to their interest rates. We have had none. We should be 2.5 points lower and save billions of dollars on all of Biden's short-term debt. We have low inflation. Too late's an American disgrace. Well, he has a pretty good point. We'll tell you why in today's video, because the Federal Reserve is apparently now not just forecasting, guys, high inflation, because they keep telling us, oh, the tariffs are going to cause inflation. Trump's ruining the economy. It's going up and up. Where's the inflation? We're still waiting for that, by the way. They said, oh, April, we saw nothing. Wait till May. Okay, May, we saw nothing. Wait till June. Wait till July. This summer, I tell you, I swear the tariffs are going to cause the inflation finally. They continue to not happen. But apparently now, right, the Federal Reserve is also claiming we're going to see a trend of stagflation, despite the fact that every single economic indicator that we'll explain here in a second does not even point to that. But these people are so stuck in their, I guess, neoliberal, ancient economic dogma where tariffs are bad, protectionism is bad, deportations are going to hurt the labor market, this and that these people refuse to change. It is utterly frustrating. It is ridiculous, but we'll get into it. First, though, folks, do us a big favor. If you enjoy the content, make sure you hit that like button down below and subscribe if you are new. Subscribing here, guys, is not only the best way to support these videos, but it also ensures that you stay up to date with all of our latest coverage, and we are almost at 500,000. So make sure you smash that red button. And with that said, So let's first of all, kind of sit down and explain the reason why this week the Federal Reserve made the decision to keep interest rates high. They're refusing to cut them. And again, guys, this is a new term you're hearing, which is stagflation. So for those of you who are not familiar, stagflation is basically an economic condition that is, by the way, very bad. Okay, you don't want to be in stagflation. It's something to take seriously. But stagflation is marked by three major characteristics. It's number one, high inflation. Okay, so that's where the inflation and stagflation comes from, right? High inflation, high unemployment, and stagflation, right? Stagnant economic growth. Here's the thing, is that the current economic indicators are showing we have none of those things, right? We do not have high inflation. We do not have high unemployment. We do not have stagnant economic growth. So you really have to listen. So we'll explain that in a second, right? But on the surface, you really have to listen to that and think to yourself, what? Like, what are these people smoking something? I mean, what is going on here, right? With the decisions of the Federal Reserve. That's why I say it is truly so baffling and mystifying, by the way, as Trump here points out and will show you as well, compared to, for instance, what European central reserve banks are doing, that it really begs, again, it's like, what are they doing here? Is this an intentional effort to sabotage the Trump economy? So let's get into that first and foremost, okay? Their justification for keeping the rates high. Well, first of all, despite their constant prediction that just you wait, you're going to see really high inflation, it's worth noting here, not only has that not happened, but in both the months of April and May, and by the way, even before that, but especially here, going ever since Liberation Day, going ever since the institution of the tariffs, that time and time again, the inflation reports have defied the so-called economist forecasts literally every single time. So it's like, how can we even trust the Federal Reserve's forecast for them justifying their decisions when their forecasts literally are never correct? We showed you this information before, but let's quickly remind you again. Yes, the so-called tariff inflation is virtually non-existent in our actual economy, number one. And when you put ideology and the economic textbooks aside and look at what's actually happening, the reports continue to show this, guys.
All right, tariff inflation missing in action as the new Trump economy is heading for a midterm sweep. How about that? That's the subject of the riff. So, where's the tariff inflation we've all been hearing about? Day after day, month after month, from the liberal media that wants to bring Trump down, and then from Wall Street economists who should know better. The latest CPI from May barely budged, up 0.1%. And since January, get this, consumer prices are up only 1.4% at an annual rate, 1.4% annually. Energy down, clothes down, new cars down, gasoline down, core goods and commodities all down. 9 months ago, when the inflation rate was twice as high as it is today, Fed head Jay Powell slammed a jumbo rate cut, which actually backfired when long-term rates went up. So where's Powell today? He's missing in action. The Fed funds rate right now is about 1 percentage point too high. So no wonder President Trump is looking to replace Powell as rumors swirl with names like Treasury man Scott Bessent, or former Fed Governor Kevin Warsh, or NEC Director Kevin Hassett, all brilliant people who would toss out the Fed's failed models and start bringing in some supply-side economists. But there's more on the early Trump economy. The Atlanta Fed's GDP tracker showing almost 4% growth in the second quarter. Employment continues to rise, while unemployment low at 4.2%. Since January, federal government jobs have declined by 59,000, while private sector jobs have increased by 500,000. Total wages for production workers are running above 4% year on year. That's almost 3 times the inflation rate.
Right. So again, here's the question. You say stagflation. Where is the so-called stagflation? Inflation is not high. Job growth is increasing, especially in the private sector. So unemployment, we'll talk about in a second more in detail, but that's not incredibly high whatsoever. And looking at the very estimates, by the way, of the Atlanta Federal Reserve, by all accounts, and by the way, that number fluctuates. Earlier, it was as high as 4%. The actual number, as you'll see here, is now at 3.4%. But basically, for the entirety of the second quarter, the forecast, right, of the Atlanta Federal Reserve has been between 3 to 4% GDP growth, which is not bad, right? It's positive. Yes, in quarter one, we did see negative growth. And so you could say that sense, but 3 to 4% growth is pretty good, right? It's okay. It's decent for sure, right? It's definitely not the state of stagflation that people would be describing. Okay. It was 3.5% just a couple days ago. Like I said, it fluctuates, but overwhelmingly it keeps saying positive in the 3 to 4s, right? It almost got it to as high here as 5% just a couple of weeks ago. Where is the stagnating economic growth? It is non-existent. That's why I say the Federal Reserve is basically making here decisions. Jerome Powell is making decisions on economic data that does not exist and shows no signs of existing, as we see here, right? So let's talk about unemployment, okay? So this is, of course, the chart. Actually, let me zoom out there. This is the chart of unemployment rate since 2000. So as you can see, needless to say, right, 4.2% unemployment is not generally considered high unemployment. By the way, again, some of those numbers are impacted by recent cuts to the federal government, not actual economic factors. And yes, private growth is surging a lot basically since the start of the year. But on top of all of that, I think it's worth noting here, did a simple research here, okay? Apparently, the Federal Reserve's general estimate for what is considered good unemployment, right? Low unemployment is between 3 to 5%. That's what the Federal Reserve says, 3 to 5%. That's about the sweet spot you want to be in. We're at 4.2%, okay? Maybe not the best ever, right? It's like, okay, you want it maybe to be in the 3s, okay, fine. But we don't have high unemployment. So I send guys say, where is the freaking stagflation? There are no signs of this. And yet you have Jerome Powell making some of the most baffling decisions perhaps ever known to man, because again, he wants to stick in just that same loop of tariffs are bad, tariffs are bad. It's like, okay, what is happening in the real economy? Again, how can you keep making forecasts based on information that you keep being wrong about? It's insane. The definition of insanity is what, guys? We know what it is. I don't know.
I'm going to put this in perspective. So 1.7% right now. For Biden, it was down 1.7%. For Obama, it was down 0.3%. For Bush, it was down 0.6. For Clinton, it was down 0.6. For the first Bush term, it was down 3%. Even under Reagan, it was down almost 1%. But here's what's more interesting, Brian. Right now, the national unemployment rate is 4.2%. For construction workers, it's 3.5%. You know where it was in January? What? 6.5. You think about how dramatic that is in such a short period of time. Manufacturing unemployment, 3.6% from 3.9%. Non-durable goods, 3.7% now. We started the year at 5.2%. Mining, oil, and gas extraction, 4.2%. We started the year at 5%. This is dramatic. This is mind-boggling stuff, what we're seeing right now. The speed, how do you get an unemployment rate to go from 6.5% to 3.5% in 5 months?
Well, what we're certainly seeing is that decades of neoliberal economic philosophy are being shattered right now, right, by what Trump is currently doing, basically trying to, push the U.S. economy in a more, I guess you could call it in a sense, nationalistic direction that actually works well for the citizens of our country, not just those of foreign nations, etc. And, these ideas that he's currently doing, tariffs, any of the stuff, it's called crazy. Oh, it's going to raise prices, it's going to do this and that. They're just being wrong about it. But still, they refuse to, admit that there's a flaw in the philosophy. Not exactly sure here, guys. But as an example, by the way, to show we're not crazy, Trump is not crazy, it's worth noting here, as Trump pointed out, meanwhile, over in Europe, and I understand our economies are not the same. They're connected, but not the same. Okay, sure. But I would like to point out here, just as a comparative sort of analysis here, that, for instance, the Swiss National Bank over in Switzerland has cut its policy rates to 0%, while Jerome Powell is continuing to hold, yes, the U.S. economy hostage in an attempt to, I think it's pretty basic here, derail the Trump economic recovery. By the way, just this month, Europe cut its interest rates for the 8th time to just 2%. So Europe has 2% interest rates right now. Meanwhile, the Fed is keeping their rates at 4.3%, which is one of the highest rates in 25 years. Yes, it's correct. Absolutely right. They're trying to sabotage the Trump economy, despite the fact that Trump has brought inflation down to 1.5%. We went through the numbers, no signs of, runaway inflation or stagflation, and yet they keep doing it. Right? As pointed out here by Wall Street Maverick, the current inflation Trump has is below the Federal Reserve's target inflation. Jerome Powell spent 4 years trying to bail out Biden and Harris. Yes, now he's doing everything he can to hurt Donald Trump. I think that fact at this point is, guys, pretty undeniable and obvious. Of course, the baffling decision-making here of Jerome Powell is getting so crazy. Apparently, governors and officials within the Federal Reserve themselves are starting to openly disagree with the decision-making of Powell. For instance, just today, Federal Reserve Governor Chris Waller has now come out and said that the Federal Reserve should cut interest rates next month, and that President Trump's tariffs, someone finally admitting, pointing out here, won't and will not and are not, by the way, significantly boosting inflation. Yes, someone in the Federal Reserve finally has the nerve to say it. Jerome Powell, I don't know, it's just like his pal Sleepy Joe, right? Asleep at the wheel, just, keep it the same, Everyone's, he never goes outside, he never looks out the window, he's just like, tariffs cause inflation, Trump is so bad, everything's falling down. Oh, let's make another forecast, guys, of the economy crashing. Oh, it was wrong. Okay, never mind. Okay, you guys are making decisions here that are impacting millions of Americans, and they can't even do it correctly. It's pure insanity here, guys. So, it's an unfortunate trend we're seeing. Okay, I see the logic that they're trying to push here, but again, I want to reiterate, the actual signs in the real economy do not back up what they are saying. Again, 3 major characteristics of stagflation. None of them are true. None of them show signs of being true. It's insane, but it's like, because our textbook, our economic textbook that we learned in college said that tariffs can cause stagflation. Okay, but your job is not to read books. Your job is to react to what's happening in the real economy. Have you considered, Jerome, that your little books are wrong? I don't know. But anyways, guys, there you have it. Just wanted to do a brief video in reaction to the situation with the interest rates this week and everything, because it's just insanity. It's pure insanity. But with that said, guys, let me know your thoughts on all of this in the comment section down below. Be sure, guys, here to leave a like on this video, subscribe to the channel if you are new. Your support is greatly appreciated on the channel as always. And until next time, God bless, have a very good weekend, and peace.